Thank you, everyone, and welcome to the JSE's Capital Markets Day. It's been a jam-packed schedule. It's actually just come from 2 days in New York, where we had the first leg of our SA Tomorrow, our 11th conference, with the same public sector delegation and as well as listed companies in South Africa, followed by a macro day here in London. And now we are thrilled to speak to you about developments in the South African capital markets, and especially from the JSE. So thank you for your time and the audience today. And I'd really like to discuss some of the attributes and highlights of our market. I'm the Director of Capital Markets at the JSE, so look after all the listings and the secondary market trade activity of the JSE. So I think it really comes, I'll start with the first slide. It really comes at an opportune time for us to present South African capital markets to you. The JSE is among the top 20 exchanges in the world, and certainly the largest on the continent, far surpasses any of the other African exchanges in terms of liquidity, where we have in our core market, which is our equities market, trading on average $1.5 billion to $2 billion a day, versus some of your other counterparts in Africa, which have a really small set of trade activity. We have some of the largest counters listed on our exchange. And while the JSE or the South African markets have been deeply discounted, probably for the last 10 years, especially to emerging markets and developed marketplace, we're seeing that we're seeing a massive re-rating to our market. And a large part of that is just in terms of the relevance of South Africa, massive trajectory from a public sector perspective in terms of embedding structural reforms to unlock that growth, but also a deeply sophisticated and highly liquid secondary market with institutional investors, local and offshore, but also with more than 30% of our counters dual listed. The JSE is a multi-asset class exchange. So we have the cash equities market as our key market, as well as the cash bonds market, which is largely a government bond market, and then derivatives markets thereafter, equity derivatives, FX, currency, commodities, and interest rate derivatives. All of this really leads to a harmonious blend of trade activity in the market. And so bringing a listing to the JSE is not just about the capital raise, but also a deep and liquid market where we can see an unlock in various sectors and in trade activity on the exchange. So just to give a highlight of the SA capital markets, the JSE is the largest and most liquid on the continent. As I mentioned, we've got 18th largest globally. 26% of the listed companies on the JSE are global companies. So they've started as South African majors, have re-domiciled globally or spread their operations. And of the 32 dual-listed stocks in the top 40, we have 50% of that making up the index weight. So really a healthy market between South Africa and other global markets. And what we've seen is that the UK has typically been quite a harmonious plumbing over the past 2 decades, but also quite a lot of synergies between dual listings in mining-denominated markets like in Australia or Canada. And in fact, in the recent reunification of BHP Billiton as an Australian major, they chose to choose a secondary listing in that reunification of their market cap on the JSE just because of that liquidity. So one of the headwinds that South Africa faced was that we had dropped in relevance over the last decade relative to other emerging markets. So South Africa came down to about 3% of weighting in global indices such as your MSCI emerging market as well as your FTSE indices. And now we're starting to see that momentum build again. One, as other geopolitical concerns rise and some of the other emerging markets starting to waver a little bit. And also in terms of our own structural reforms where we think that there'll be a growth trajectory. And we have targets set now on GDP of going from 1%, Diane will cover it better, to 2%, and even ambitious targets past that in the medium term. So we offer access to deep pools of capital. Over the past decade, we've seen over 968 billion rands, just under 45 billion pounds raised in capital raised on the JSE, 131 new listings on the JSE, of which 34 were international companies, and 228 billion rand, almost 10 billion pounds raised by inward listed companies. And we remain at the forefront of innovative products. So the JSE has a sustainability segment, Thank you. So we have launched a sustainability segment, which has expanded our green bond framework to add in sustainable bonds and sustainability-linked bonds. We've also recently added specialist securities such as actively managed certificates and actively managed ETFs. And then we have 170 indices partnered with FTSE JSE, which is also world known. And in terms of activity and participation, it gives us deep and liquid markets. So what we wanted to highlight to you is we have quite a strong top 20 mix in terms of global companies. And a lot of the trade activity, even though we have just under 300 counters listed on the exchange, because it's an institutional market, we see a large portion of that in the top large portion of the trade activity in the top 60 counters, top 40 counters, certainly. Now, what we've seen over the years is, and I actually did an op-ed piece where the UK market in particular, but global markets, developed markets are really struggling in terms of liquidity. In that op-ed, we had done a research piece where less than 4% of the UK savings is actually invested in the UK market. So South Africa offering a dual listing market, harmonization with our regs and the timelines, as well as deep and sophisticated investors, it really is quite a deep market in terms of having some of these offshore counters tap into a secondary listing in South Africa and really unlocking that value and be competitive in a global space. Also, what we find in South Africa is we have exchange controls in our market. Now, while they were changed last year, we still have them in place where 55% of our local asset management money stays onshore in South Africa. So that was changed last year from 30%, where they had increased the limit to 45%. We did see our locals shifting up to their limits. But now, as they've reached their limits, we see the locals looking for onshore exposure, but for offshore markets. And by doing a dual listing in South Africa or accessing our capital markets in South Africa, the inward listeds are considered domestic. And so it gives our local deep institutional pockets of liquidity access to international stocks, but listed on the JSE. So I'm pleased to say, of course, the Government of National Unity, which was in May, from April to date, South Africa on a normalized return is a top performing market, which is really impressive. And it's about time. We've really wanted this to come. And even over and above the S&P 500, we've seen South Africa lead the charge in returns. Recent article last week by the FT, and that's where we got it from. And even though our EM counterparts have had decent underpin of growth in their markets, a little bit of froth off their markets right now in terms of their performance. So long may it last, but I think there's a fundamental and sentimental shift at the moment in South Africa, which will play to good and strong capital markets. South Africa is also well positioned as more than just an emerging market. It's positioned quite strongly as a defensive market. One, because as I mentioned, we've got a lot of rand hedges in our market from the dollar exposures of companies, but also the commodities underpin to our economy and our markets as a result. And so even globally, where you see risk on, risk off between China, there's quite a strong play for South Africa in terms of its defensiveness. So these are some of the names on our market, inward listings to date. Many names that you would recognize here and world majors. We also see a healthy pipeline of M&A in our market. So, for example, the most recent one is Canal Plus, which is making a bid for MultiChoice in South Africa. And either which way, even if they don't make a bid for, even if they don't do an exchange for shares on the MultiChoice offer, unlikely that they will. I just noticed Tembeke in the room. You can chat to her afterwards. They have indicated publicly that they would consider a secondary listing, and they've just spun out of Vivendi, doing their primary listing in the UK. So this is one we will watch. And other global majors, for example, through Amsterdam, or through other markets, we're seeing quite a lot of interest. So over the last 36 months, the JSE has done a massive amount of regulatory reform to really right-size our exchange. Not dissimilar to what the UK has done, but I think now the opportune time is that the momentum of the market is supporting this in terms of the attractiveness. So we've done a number of cutting the red tape initiatives, really just because in our delisting space, we saw the delistings come largely in the small and mid caps. So we've tried to make it a little bit easier. Most recently this year, we've done the market segmentation, which is the segmentation into the, segmentation into the two boards between the prime and the general. And this is really to facilitate right-size listings and appropriateness of listings, to keep the listings and also to make it relevant for the top end of the market and then a growth segment. We're doing a simulation project in terms of simplifying the listings. I suggested to our reg team we just tear out every odd number in the listings book. They didn't quite like that, but that said, they are looking to make it just simpler and take out the ambiguity, which often comes in with expensive understandings from a legal perspective. We've also done a number of fast-track listings, which is trying to accredit other exchanges globally to entice more secondary listings in our market. So even if you don't have to access capital raise, you can actually enjoy the benefits of a deep and liquid secondary market. We've just been on the road this week with Euronext Amsterdam, where they don't see South Africa as a competitor, but as a complementary market to deepen the liquidity. And we already have a number of dual listeds. So as you can see, this for us is really a key way to deepen our markets, because we take out that duplication and the regulatory burden and really streamline the process. AB and InBev, when they had acquired SAB Miller years back, it took them 21 days under the fast-track listing regime. And we've done a whole host of reforms just to really make our markets relevant. So we think we've done all that we could in terms of the controllables and really now strong and positioned in terms of the things that were out of our control, like the macro. We feel that there's a positive momentum to really catch a good upside trajectory to the South African markets. So as you engage with us today, there's a whole host of presentations. Deanne will give us an overview from an economics perspective, just to put the market into context, as well as presentations from various advisors, as well as the banking teams. We want to say that South Africa is open for business, but more so the South African public markets and capital markets of the JSE is open for bringing your activity to our market. We've just announced another conversion of a UK company this week, and we really look forward to adding value and unlocking a deeper investor base for companies listed on the JSE through dual listing. So we look forward to the engagement. The team is around. Sorry for a little bit of a disruptive start to my presentation, but I hope you got the information you need and look forward to engage further. Thank you.
Thank you, Val. There was some technical gremlins. Fortunately, the guys ended up resolving it by, they were actually projecting it via Zoom from Johannesburg. So a nifty idea to fix that. Before we go on to the next presentation, any questions in the audience? We've got one over there. Thank you. And the second one here. Mics are coming. We'll take 3 at a go, since we're running a little bit behind. Otherwise, if we don't have a third one, we'll just cap it at the 2. Thank you.
Tom Minnie again from African Capital Markets News. I was just wondering if you see increased retail participation in the market through platforms like Easy Equities or other platforms, if that's a big shift in the way South African market is going?
Thank you. So on the retail participation, absolutely. We are seeing an uptick in retail participation, certainly in the intermediaries, like you mentioned, service providers like direct access players like Easy Equities. If you speak to Satrix, which is one of the largest ETF issuers, they've had massive trajectory. However, it's still an institutional market in South Africa. So while we've had good growth, so still a long way to get to markets like India or Asia and the US. So we're not very dissimilar to the European markets, but still a little bit behind. It's also very difficult to quantify actually what the direct access is of retail, but there's definitely a concerted effort, certainly from our issuers, from the brokers, and from just general market sentiment to try and get deeper financial inclusion. With regards to the what we intend to entail with the different regions, in particular Euronext and all of the Euronext markets actually, and New York Stock Exchange, we've done harmonization through the listings requirements, and I'm sure that there'll be a lot more in terms of different regions. It's nuanced per region, but what we're trying to do is, one, to be competitive as a secondary market venue, even for capital raised to tap into the deep institutional base, but also where it's recognizable and we don't fully compromise a standard that is not good for South Africa. So I think it's a balance in any regulatory framework. What I can say is I think that in the past 36 months, we've been very deliberate about reg reforms and very open to it to make it relevant per segment. And you will see that continuation of harmonization between meaningful exchanges and jurisdictions. It's what we would see as diversification, I think, even for us as a marketplace. Now, from a trade activity perspective, we have the global majors in our market, whether it is the long onlys, certainly from South Africa, and then the international long onlys, hedge funds, quant-based firms, liquidity providers. The majors are in our market. And so having more dual listings and more alignment with global exchanges helps our case in terms of saying it's so easy and the fungibility. So it's just accessing deep pools of capital. So we will certainly continue on that trajectory up to a standard of not, going too low for SA. Thank you. Are there any other questions?
That's it. Thank you. Thank you, Val.
Great. Thank you.